All right, good morning. Today is Wednesday, August 14th, 2024, and I am back with another edition of the Investing Systems live show. And as you know, CPI came out this morning, and it was actually relatively tame, but the market's been pretty wild since the last time we talked here, and so I think everything's being digested here. And it's kind of interesting because I'll tell you what, this month, the end of July and the beginning of August has been extremely volatile, which is extremely uncharacteristic for this time of the year. I usually tell people that July and August are boring, and they have been over all these years. July and August are just year after year. It's like the market slows down, and the ranges are real tight, and there's nothing going on. And all of a sudden this year, well, of course it is an election year, but we've seen a lot of crazy volatility recently. And of course, we've seen the market sell off, so might as well jump right into the chart here so you can see what I'm talking about. Yeah, I mean, in July, obviously the market hit an all-time high. When I say the market, I usually talk about the S&P, but hit an all-time high, and then all of a sudden, kind of for no reason, I suppose. Well, they always come up with reasons, and this is something I'll get into in a minute here, but all of a sudden, mid-July, the market started getting volatile, which is pretty uncharacteristic of this time of the year. Typically, these like real tight, boring, narrow range days that I guess we saw in June. June was actually kind of like what July and August typically are from year to year to year. And I'm talking, over the last 10, 15 years, July and August tend to be super dull. And this year's different. So anyway, um, there's actually quite a bit to talk about on this chart here. So we had a pretty good dip, and then the craziest thing is like these 3 days right here. There was a lot of drama out there, and of course, it's about the yen carry trade, right? You heard a lot about that, and all day, let's see, whatever day this was, like this bottom day here, all day long, CNBC, which I barely watch anymore. As a matter of fact, I always have the sound muted, but I just leave it on so that I have something on in my office. I'm not going to watch sitcoms during the day, and it allows me to keep track of a lot of different instruments that I wouldn't normally follow. But anyway, long story short, all day long on this particular day, at the very bottom, CNBC had this big giant thing on their screen that said that the market was selling off on recession fears. Recession fears, this and that, and that was like sort of their main narrative, which I thought was kind of weird, but have been hearing a lot more about recession fears, and now all of a sudden, I think Goldman came out with something that said, 40% chance or 25% chance of recession, and somebody else mentioned it. But the funny thing is that there's a lot of chatter out there that we're already in a recession, which I suppose is possible. And typically, when you're in a recession, when you begin a recession, it doesn't become apparent for a period of time. But anyway, it's a lot of craziness. But the funny thing is the whole, the yen carry trade and the recession fears or whatever basically sort of disappeared overnight. Right now, I got this going all the way back to the last October lows. Actually, the October lows of last year. But I mean, what day was this? Right here. This on 8/6, which was a Tuesday, right? Like all that sort of disappeared and everything was back to normal, and the market's been rallying ever since, which is kind of strange. And now I'm not going to attempt to draw a fib on here, but like right about where we're at here is is about a 50%. It's retraced about halfway back, put it that way. And there's that 50-day moving average, which is kind of interesting. These 3 days here were kind of like, almost like a panic, right? I mean, if you look at how the market fell so quickly in 3 days, it was sort of like a little mini type of panic. Now, I haven't actually pulled up like how deep that was, but it was a fairly significant sell-off. So what's amazing to me is how it gapped. I mean, it literally gapped through this other gap here, right? I was thinking, well, kind of that gap would maybe get closed when the market started selling off, and it came close right there, but it's gotten filled back to the upside as of now. But this was kind of interesting too. This was sort of a what I envisioned as a major support level. And so, I've had these on the charts for a long time. And what's crazy is is how the market like poked and broke that trend line a few times there, right? Look at this close right here. Like these two closes were basically right on this trend line, which is not 100% perfect, but it's close. As I zoom in, I notice I'm missing by a pixel here. But then all hell broke loose, and it gapped through the gap, and then it gapped through that support. But typically, when you see a sell-off like that, and then a gap down like that, as soon as that thing goes green, I think that they tend to like move in the opposite direction. So, anyways, the dip buyers are feeling pretty good. The dip buyers have, I suppose, are always waiting for an excuse to, any sort of sell-off, and that was quick and it was fairly severe, and so it sort of made sense that people that were waiting to buy the dip would step in there. But what amazes me is the narratives that they create around these sell-offs, and then as soon as you get a couple of up days, those narratives totally disappear, right? Totally disappear. So we are in the thick of earnings season now, and that's it has a little bit to do with it. I've noticed that quite a few stocks have gotten hammered on earnings, like individual stocks, and then there's all the. I sometimes I wonder if this thought's been popping in my head lately. Oh, by the way, the underside of this 50-day moving average, like where we are right now, would probably be a spot where I would say that the market might encounter a little bit of resistance. I mean, if you look at the last, what is this, 7, 8 days or whatever, straight up like that, it might make sense for a little backing and filling. You never know. I mean, it's hard to say. But like I said, about half of this has been retraced, and whether there's actual resistance at the 50-day or whether because everybody, all the technical analysts think and say that there is, then it could potentially be a self-fulfilling prophecy, right? But the other thing is, and I haven't done this, but I suppose I should draw a trend line down across these highs. Draw a trend line down across these highs because that's another potential point of resistance. The funny thing is, you guys have been watching this show for a decade or longer, know that I'm a firm believer in certain aspects of technical analysis. One being like laws of nature, right? And so one law of nature here, and this is actually a pretty good example. There's a law of nature aside from technical analysis. I mean, it's just that the market can't get back to the highs without moving above this trend line I just drew. And so there's no arguing with that. There's no possible way that anybody can say, well, trend lines don't work, because if you put something out there as simple as saying the market can't get back to the highs without moving above this trend line, well, that's a fact, right? So that's where certain things like trend lines and technical analysis are very useful, because I can draw that trend line and say, well, that's a pretty important point. Now, the thing about this is, and that I talk about this a lot, drawing the steeper the trend line, the less valid it is. So at this point, it's sort of valid, but the market could, rally above that trend line and still roll over. So you've got this super long range, bearish engulfing day, I guess, if it was a candlestick chart, was basically like that was the big warning sign. Actually, there's a few warning signs on here, but anyway, that high up here, which is really close to the all-time high too. I mean, that's an important level, but for right now, I'm going to keep my eye on this downward sloping trend line and the 50-day moving average, and we'll see if there's any backing and filling, or we'll see if the market can rally straight up. I noticed that the MACD histogram today is turning green for the first time, but that doesn't always guarantee that you're still going to get a move in that direction. And plus, the day's early, right? So not sure what that's going to look like until after the market's closed. But anyway, yeah. So kind of a precarious spot. The dip buyers, people that wait for these sell-offs and start buying these dips, they're emboldened right now. And you'll probably have a lot of other, you probably had a lot of shorts because the drama was excessive over these couple of days. Actually, this day and this day, the 5th and 6th, the drama surrounding the sell-off was pretty excessive, and I got to admit, it was a pretty dramatic sell-off, right? So the way I look at it, the first round of dip buyers, has stepped in, and then you got some people chasing it, thinking that, well, maybe I missed out on my opportunity, so I better buy now. So we'll just have to see. We'll have to see how it pans out. But I mean, at least we got all these levels to look at here. So it's tempting, it's tempting to draw a Fibonacci on here and see how close this is to 50%, but I'd say it's like right around it. So 50% retracement is potentially an area where it would reverse, and so a lot's going to revolve around what the news cycle is going forward here. What I was alluding to a point earlier. Interestingly enough, the NASDAQ 100 tagged the 200-day moving average, which is, that hasn't happened in a long time. This is a daily chart, obviously, so the 200-day. But look at this, like last year's, sell-off, which lasted all fall and into November. So it was like July to November last year. And so, what's interesting about this is the NASDAQ 100 peaked in July 2023, right? You can see that peak right in the middle of the month here, and look at this peak right in the middle of the month. And so, you had the same sort of thing. You had a little bit of a sell-off and then a rally, and then it sold off more, and the bottom didn't happen until, the end of October. So we could potentially be looking at something similar here, right? And I mean, the NASDAQ 100 seems like it sold off. Well, it seems like it did. It sold off quite a bit more. But what's interesting about this, I mean, obviously it was an intraday tag of the 200-day moving average, but man, you got to go back to March of 2023 for the last time that happened. So that's kind of interesting. The NASDAQ 100, I should have pulled this up, but it is so heavily weighted in. I mean, you can take like 4 or 5 stocks, and then obviously the Magnificent Seven or whatever. But it's so heavily weighted. It's like 25% of it's probably 4 stocks or 5 stocks, and 30% of it is probably 7 stocks or whatever. And so extremely heavily weighted. Speaking of which, I had a huge, massive watch list over here a while back, and basically what I did was I went through and deleted just about everything in my watch list because these charts were running so slow. There's nothing wrong with my internet connection or computer or anything like that, but the charts, I'd type a ticker symbol in and it was just so slow, it was maddening. This is one of the craziest, short term, especially for a company with a market cap of Apple. And that's something else that that makes me nervous. I'm always lean towards being cautious and have over all these years. The fact that the market cap swings on some of these companies, I saw something. I guess it was Nvidia, like a week ago or something like that. The swings are like billions of dollars in very short amounts of times, which is just insane when you think about it. So there's a lot of insanity out there in the market right now. Like for instance, yesterday I think Starbucks was up like 25% because they changed CEOs. But when you think about that for a minute, I mean, yeah, sure, it's good news and this and that, but I mean for a company the size of Starbucks, for their market cap to fluctuate by 20-25% in the period of one day is just insane. I mean, it's just crazy. And so, yeah, it's kind of like this. I mean, these market cap swings in a company the size of Apple it's scary. It's scary that they could, fluctuate this much because just astronomical amounts of money. And the thing of it is, all over all these years, I've always thought that market cap was an important metric. It's a very important metric because I mean it cuts through everything else. Like how much is the company actually worth, right? And so, a few years back when we had a lot of silly companies IPOing, we had a lot of crazy IPOs. The IPOs, going back to, remember the SPACs, they would all IPO at $10, and there was all kinds of ridiculous companies that IPO'd with ridiculous market. And I'd always look at the market cap and I would say to myself, is this stupid company worth, $20 billion? No. And that was sort of my rationale for it. So um, I'll give you an example. I might have to go to the weekly chart, but I haven't looked at this chart in probably, let me go to a monthly chart. Yeah. So, this is a great example, honestly. Oh, by the way, if you ever look at a chart of the South Sea bubble, the South Sea bubble chart looks almost identical to this. You just had a parabolic move up and then a move down and then a little sort of bounce like this and then just flatline. Yeah, so I mean, you remember when Peloton was one of the Wall Street this is like the .com bubble, and there are so many charts that look just like this. Just a few years you had a whole sort of .com bubble and bust, and then these stocks are just, well, you can see it now. I mean, but my point here talking about market caps was, somewhere over here, even at the IPO, but once this stock sort of took off here, the market cap was so astronomically overvalued compared to whatever. And so I can tell you what the market cap is now real quick. So I'll pop over to FinViz on my other and just for the fun of it, I just want to see what the market cap of Peloton is now that it's had its .com bubble and bust. So it's 1.1 billion with a B dollars now. So at $3, it's $1 billion company. I can't even do the math in my head of what the market cap was when it was $150. Probably do that quicker than I can. But anyway, this is sort of my point. And I remember thinking when some of these things. There's another one too. I just read something about this company, and that's why it comes to mind. Bumble. I remember distinctly when this Bumble, which is, I think it's a dating, it's a dating app. I remember when this thing IPO'd over here, thinking how ridiculous it was because it was a dating app, and they had the right when they IPO'd, they had the CEO on CNBC, and I watched her interview and all that, and I thought to myself, well, hey, great. I mean, I wasn't knocking it or whatever, but I mean, it was a dating app and it was IPOing at some ungodly valuation. And so I just pulled it up over here. $760 million is what it's worth right now, right? So, three-quarters of $1 billion even after this. And I remember thinking to myself, and that's, you've heard me talk about this over the past couple of years about how, in some respects, it seems like we're repeating a lot of the dot-com bubble. And that's how I feel about some of these companies, Bumble and Peloton and I mean, I've seen it so many times before. And what happens is, you get this sort of, and then of course you can talk about the AI hype and potential bubble. Yeah, but speaking of that, this symbol I have on my watch list here, just for the fun of it, the Global X Artificial Intelligence ETF. This thing's holding up pretty good. Oh, I'm going to pull up the whole chart here because, whoops. Whenever you see a new IP or a new ETF, like there's so many ETFs now, it's ridiculous. But anyway, I like to look at the whole picture of something like this. This thing's actually done pretty good. I mean, it's been around for a few years or whatever. It looks like it's fairly actively traded. What's kind of interesting, if I sit back in my chair and look at this, there was this big run up here and then the big sell off and then another big run up at the higher high, but he's looking a little bit dicey right now. So every single sort of narrative as far as the next big thing, AI is obviously the next big thing. It's pretty obvious, and it's cool. I mean, I'll be honest with you. I quit using Google and I started using this thing called Perplexity, which is way better for finding out information. I mean, Google. I've been reading a lot about Google just basically sort of shooting themselves in the foot because their search results have gotten worse and worse and worse, and now you've got I think it Chat GPTs is going to release a search engine, but Perplexity is already, to me anyway, a better search engine than Google, and that happened pretty quick. Most people haven't even heard of Perplexity. Be honest with you, I would say the general public. I mean, internet people and people that are online and on the web all the time, and certain circles or whatever, obviously interested in AI are familiar with Perplexity. But anyway, I never have used Chat GPT, but I went straight to something called Claude, which is pretty amazing. And so now these things are, these AI tools are free for limited use. Otherwise you pay something for them, but I'm not paying for any of them yet. But anyway, AI is a huge game changer, and it will be. And so I suppose that NVIDIA is what everybody thinks is, the whole supplying the picks and shovels to the AI market. So, look at that. This is a weekly chart. This is actually a pretty good example of the whole idea, and we've talked about this for years and years and years of, you get a sell-off and a sell-off and a sell-off, and then finally that sell-off ends with a big gap lower and a move higher. One thing that annoys me about these stock charts, back when I used to use the other charting platform, many years ago doing this very same show, if the close was higher than the open, this bar would be green right here, right? And it was based on the open versus the close, because to me that's always been the most important thing. If and this is where CNBC like blows it all the time. And I mean, 15 years, 20 years ago, we were talking about this. Is if a stock or the market or whatever gaps up and spends the whole day going down, but it's still higher than the previous day's close, they pretend that it's up. And so to me, it's always been about the directional move from the open. But I digress. The important thing to note here is, and if I was just getting started, with technical analysis again, this would probably be one of the most extreme examples. You could print this out and hang it on your wall. When you get a rally going like this and a stock rallies and rallies and rallies, or the market rallies and rallies, then you get finally at the end of that rally, you get like a huge gap up like that, and then it goes red, and like that bar right there, if I was short-term trading Nvidia, I mean, and you could look at this one and say, well, boy, that sure looked like a potential top, and it did. And there was a couple other ones that would have, like these couple of right here, but anyway, something as dramatic as that, you could practically bet that that was at least a short-term peak. And then you get down here and you get the exact opposite. You get sell off, sell off, sell off, sell off. Everyone's freaking out, this and that. And I mean the percentage move on this too was pretty incredible. I mean from 140 to 90. But anyway, same sort of concept here is as you get, sell off, sell off, sell off, everyone's freaking out, and then you get a huge gap down to open, and then you get a move like this, and that's what I'm thinking. Like a lot of traders, investors, or whatever were probably thinking to themselves, well, I can just get long this thing, put a stop at 90, and go about my business, because that's the opportunity I was waiting for. And of course, this thing's just had a 10-for-1 split, right? So, but anyway, this is there's a lot to see on this chart. I'm not going to get too far into it, but this particular day this is the insidious day right here where it sells off. The first round of dip buyers think they're getting a deal, right? And that's kind of where the overall market could potentially be right now. Is you have a huge run up, you get a sell off, excuse me, and then the first round of dip buyers step in, and a few weeks goes by, and they think they're geniuses, and then all of a sudden you get a day like this, and that while it's still consistent with the prior several days of run up, like it wasn't too bad. This is where it kind of confirmed that looks like we might be on a second leg down, right? And so anyway, it's just let this be like a little cautionary sort of chart pattern. It's a great chart pattern because obviously this is one of the most widely followed, biggest market cap. I mean, I saw something, and this was sort of the wake up call, I guess, and I forget where it was, but it was probably somewhere way back here. Literally on the NBC Nightly News with Lester Holt, they had some young girl talking about, investing in Nvidia. I don't even remember what the segment was about, but it's the modern day equivalent of the shoe shine boy giving you stock tips. So I was kind of blown away. They were talking about, maybe it might have been Nvidia's earnings, like back here or something. I don't know, but I was kind of blown away by it. Anyway, there's a lot of, and speaking of these chip stocks, I want to look at AMD real quick here because well, there could potentially be someone listening to this show that remember when me and Doug were talking about AMD when it was $1, when it was $1, $2. We were doing this show in the morning one day, and AMD was starting to get a little something going. It was crossing from like $1 something to $2. You remember that? And I'm sure, I believe it's split a couple times since then. So, I mean, I'd have to go to, well, let me go back to the monthly chart because it hasn't been that long ago. Yeah. Yeah. So, on this very show, back here in, probably 2015, 2015, I would say, 2016, back over here, we were talking about this thing. Um, and the reason is that even though the stock was, a dollar, $2 or whatever, and had been flat for years, the chips were still in every computer I had. And you go to the store and, there was two kinds of chips that you get in a computer, Intel or AMD. And so, I kept thinking to myself that it sort of made sense that they were going to be around for a while, because even though their stock was a dollar or two, because they were still, putting the brains, the CPU behind literally half the computers out there, if not more. So anyway, this is an interesting pattern right here because, and I've always looked for symmetry. I've always thought that was sort of the key to technical analysis and charts was symmetry on the chart. And boy, this current sell-off has a lot in common, has a lot of symmetry with this sell-off and just maybe this little bull flag here. See, that's the tricky part here is you got this beautiful little bull flag here, and you have like this big long, I mean, this was an entire year. Literally, this was, a year's worth of sell-offs. I'm actually a pretty firm believer in looking at the looking at the monthly charts, the weekly charts, and then the daily charts, right? And so, because most of the time the daily chart's just kind of a lot of noise. I mean, you can't really tell what's going on, but you look at a chart like this and you think to yourself, nothing happens quickly on a monthly chart, but based on this chart, it's going to be interesting to see if, the current pattern just turns out to be kind of a near-term bull flag, or whether it's going to end up, being a big down longer-term move. But anyway, a lot more I could talk about here. Last thing I'm going to look at, I could actually talk for hours. I haven't even scratched the surface of all the different things I could talk about. But as long as we're looking at, NVIDIA and AMD, we might as well look at Intel here. The craziest thing is that Intel is a Dow stock, right? Imagine where the Dow would be if they had put AMD or NVIDIA in the Dow instead of Intel. It just goes to show you how times change. And boy, I don't know. I mean, Intel's gotten a pretty darn bad rap. And if you look at this thing, I mean, look at this. Intel was a $60, $60 now. It's 20, and it's the chip stock that's in the Dow. I remember I was in this business when they added Intel and Microsoft to the Dow. Now, I can't remember what year it was because when you've been doing this as long as I have, you can't remember everything, but I do remember. I remember when, every now and then they shake up the Dow. But anyway, this is another very instructive chart when you look at the monthly, and it just goes to show that no matter what you do, you always run the risk of, losing a ton of money in a brand name stock if you buy it at the wrong time and hang on to it over 25 years. I mean, this ought to be like, some sort of lesson in investing school of some sort, and you could probably build a whole, discussion about what actually has transpired here. But yeah, no, I mean, normally, obviously, stuff like this, there's lots of stocks like this, but the fact that this is a Dow Jones Industrial Average stock, and it's trading for half of what it was 24 years ago. That's insane, right? I mean, and so now, you have to look at this. Well, and the other thing that you could make part of this discussion is the fact that the Dow is price weighted. So a $20 stock in the Dow is meaningless. It means nothing, right? And so that's why it was brilliantly designed to basically always go up because whatever the highest priced stocks are. And so price weighting is, I mean, it's ridiculous. Market cap weighting like the S&P makes sense to some degree, but price weighting is almost doesn't make any sense. But what makes sense to me is that they should have ditched Intel from the Dow and added AMD. Or if they had added, Nvidia to the Dow would probably be at 60,000 right now. And so it still blows my mind that, how the Dow tracks so well with only 30 stocks in it. But that's a whole nother conversation. Real quick, we need to look at the weekly chart of the S&P just to get our perspective. In this particular chart where I've got all this stuff, marked up from way back when. Yeah, this little dip here in spike low, um, this little dip and this spike low, this sort of, panic sell-off and spike low is kind of weird. I mean, it's kind of weird in a way, and like I said, I like to look for symmetry on the chart. And so, what I look for is a high, like say back here at the beginning of 2022. We had several weeks sell off, big time, and then a spike low, sort of, this is a very similar pattern. And then, so this would be, right here would be the analog for where we are right now, right? Does that make sense? Like, we had 3 big down weeks and then sort of a spike low reversal. And so here we had 3 big down weeks and then the gap down sort of spike low reversal right there, that little pivot. And so anyway, I look at that and I think to myself, well, interesting. At least there's some symmetry on there. I mean, could the market just this could have been a sell-off like this one, where you just had like this little temporary sort of sell-off, and then you reverse and start going back up, and that's entirely possible. But it's entirely possible. But I still think that so you just have to kind of weigh, and you just have to see what transpires on the chart. So anyway, I'm gonna leave it at that for right now. Kind of used up my time here. So join me next week, same place, same time, and we'll take up right where we left off.